good morning. Predicted Trades family. Hope everybody's doing well. Oh, what a day yesterday. Man, the market pumped so hard. So, let's just take a look at what we got yesterday. So if we look, we've been having this nice uptrend that's been carrying us. Boom. That uptrend carried us up into that holiday week where we just consolidated. Had a nice, this was before the holiday week. Then we had a nice push up last week, almost getting to the 200. We slipped back a little this week heading into that GDP and beige book. And pretty much the moment that Powell started talking yesterday at 1:30, we had the start of this drive up. I'll zoom in a second to talk about the structure of that drive up and why we basically had no pullbacks. But we got above that daily 200, and we are approaching our trend line from the highs of this year, where we topped out in January and then again in March. We almost got there off of that summer rally, and we rejected right at that 200 and trend line. Now we have gotten through the 200 and we're knocking on the door of that trend line. So just want to look at the structure of where we're at. We do have a tight wedge as well from the lows. So as we look into the end of the year, we want to start thinking about the fact that we're moving into a very tight wedge. Could we break down? Absolutely. But we do have a lot of big key levels supporting us. Not only our recent lows, but a couple of these levels are from back before the pre and post COVID. Sorry. Come on, Tots, don't be slow for me today. There we go. So some of these levels below were from pre-COVID, post-COVID recovery. You can see that we got through the pre-COVID high, set a high, that 35.87. That's basically where we hit, slipped for a second, but based at recently, back in October. And that's when we were talking about this could set up a rally into that 200, that trend line, and if we can take out that trend line and start to get back to some of these highs, then technically this year won't look so bad, right? We'll have a big wick down, and if we can get through and maybe recover back to some of these highs, right, it'll be a small candle body with a big wick down. So just one thing to think about, yes, we have been in a bear market. Starting to break above the 200 again is our first sign of switching into out of that bear market, right? But we still have to get through this trend line. We still have to take out these recent highs. We also have the likelihood, again, of rejecting. There is still plenty of negative news out there. We have the issues in China. We have, rumors, call them what you will, about tensions with China and Taiwan. We've got this thing going on still with Russia and Ukraine. We still have inflation potentially, although it might be coming down. We still have, the potentials for a recession. So there's still plenty of, what ifs out there that could keep us down in consolidation and stop us from breaking back out. But there's also the likelihood that they try to pump it through and make a killing before bringing it back down again. Point being, we just want to watch this structure. We could start to consolidate before getting out. We could start to break out, reject something right outside of breaking out, and come back for a retest. Plenty of scenarios. After such a strong push yesterday, would not be surprised for continuation, would not be surprised for some sideways action. We do have more economic data coming out today. Let's zoom back into normal time frame. In fact, let's just load our normal setup. Give it a second for this to update. There we go. Now, let's also talk about the structure of yesterday in our review before I talk about where we can be going. So, yesterday, before the big pop happened, actually, here's what I want to do. There we go. So yesterday we open below our MAs and we reject them to retest our levels that we held yesterday. Yesterday's low was 39.41 and we had our levels at 39.53, 39.61. Yesterday we opened, had a quick pop up to reject MAs and then started to drift down, losing that 39.61. And we did make it down near 39.41, but we never completely hit it. So it was a drift down into yesterday's lows. We never tapped yesterday's lows. They basically kept buying every dip, right? Leading into Powell's speech. You know, we had a drift down, didn't get to yesterday's lows, popped back to test those MAs in 39.61. Another hard drift down, did not hit the previous day's lows, and another pop up. We were also watching the calls on SPX and SPY and noting that they were holding the premium up. You know, even when we dropped and set new lows on a very strong drop, right? We made it there in 15 minutes? So we made it in 30 minutes. We lost that 39.61 and almost made it to 41. So very quick drop. On any other day, call premium on 0 days should have set new lows. But as we called out right here at the lows yesterday around 12:30, all of the call premiums on SPX and SPY held up above their low a day. They did not set new lows, and so that was indicative of a very large move coming to the upside. That's why we started, midday talking about mainly just looking at calls, not expecting a breakdown. If we're wrong, we'll cut the calls and we'll pivot direction. But we started loading up to the long side. And when Powell started talking, again, there was a quick pop down, but we did not even test low of day. There we go. So it did wick down, test the first lows, and then wicked right back up and took off. The first pop, and let's try to maybe zoom in on our timeline, or our time frame. Let's look at a 5 minute. So, that first pop, just look at a 5 minute candle, right? We pushed up hard to 39.80, gave a pullback to 39.70. If we look left, we always want to look left, right? We have that hard pop up, we run into a bunch of squeeze tops, and probably some pre-market highs. I'm a little too zoomed in here. There we go. So we popped through all of our pre-market highs. We pull back just to test the previous high of day and hold. And then the next 5-minute candle goes up and sets new highs. So I know that some of us were already loaded long. Some of us shorted the first pop, but we always want to be cognizant of how far they're pulling it back. We always want to look left to see if they, to come up with a thesis. If they can hold high of day, then you actually likely want to cut your short from the highs and start to switch long again. I only talk about this to say, I've been there where it starts to pop. You think, okay, let me short that pop. But you need to also be thinking, I need to cut this at some point. Is this just a pullback or is it a change of direction? So there's plenty of times where I've been in the trade where I have shorted the pop, locked some profit, and then it just takes off further. I cut my runners for a loss, and I'm watching it just truck up to the upside, leaving me in the dust. That's why, yesterday I tried to call out constantly that the calls were holding up, that it's still a long trade. And, even though, you might not have gotten in at the lows and it's starting to take off without you, every pullback is an opportunity to play that trade in continuation. Once we started to get going, every pullback was holding something key. We made it up to 4,000. We pulled back to that 39.80. We held above the previous high of day. We held these pre-market highs, and we broke back above that daily 15, right? Like when we made it to 4,000 and pulled back to 39.80, I was calling out, hey, watch this daily 15. If we break back above it, we want to be going long. This pullback is a chance for them to load into the next leg of the trend. And back here at the lows was calling out for the 40/20s on SPX. They hit about 90 cents. On this PAL wick, I think they only pulled back to about $1.50 maybe. Those went 90 cents to 50, 90 cents to 50, with 90 real world dollars to 5,000 on the 40/20s. But once we started to get going and had pullbacks, you had opportunities to load into the 40/25s and 30s at this point. That a couple of folks in the room were calling out, I think near like $1. I think some of those closed at like 30, 40. As the day progressed, I believe it was on this pullback where we ran into about 40/40, pulled back to 40/25. That's when we were calling out the 40/50s, which aligned with the daily 200. If we're going to take out the daily 200, watch the 40/50s. They pulled back to what was it, a 60-cent entry, I think. Our beast was at 87 cents, if I remember correct. What did those close at? 16, maybe 20? They got up to 20, I believe. I can't remember exactly where they closed. But, we have to think like big money. They loaded on the closer strikes, the 40/20s, way down here. Then it all starts to work out. They lock up profit, leave runners. On pullbacks, they're loading the 40/25s off of the beast level. 40/25s, 40/30s. So each pullback, the next strikes pull back and hit beast, right? On this pullback, the 40/25s, 40/30s pulled back to beast and then took off. On this pullback, the 40/50s, 60s, 70s pulled back to beast and took off. And even on this little pullback, the 40/65s and 40/70s pulled back to beast again before taking off and closing at 10x on each strike. So I just want to cover that to say, when big moves start to happen, we don't necessarily want to try to fight trend and looking for reversals, right? I know a lot of times with our system, we are looking for reversals because the beast zone is a reversal kind of tool, right? Price will drop, it will hit the beast zone, and then take off again. That is indicative of a reversal. But the tool also helps us when a trend is going on and a pullback is happening so that we can look at the next strikes and see, are they arriving at beast? So I just wanted to cover a little review of yesterday in that big move, just to say, we did a great job calling out a long side trade that calls were holding up. Even before Powell started talking, everything to us was pointing upside with our system, whereas a lot of other indicators that most retail traders use were pointing to the downside. VWAP, we kept rejecting, and then we took off, right? And even though you might not have gotten in at the beginning, there were opportunities all day long on every pullback. Every pullback held our MA clouds, saying that the trend is going to continue, and that every pullback, the next strikes out, pulled back to their respective beast levels, held, and then took off, to cash settle at new highs. So let's go look at what we got going into today. Our PCE data just came out, it looks like. $309, I'm seeing your question in the chat. If you were to apply fibs, would you use it from yesterday's low to high? Would you start from the squeeze started? To answer your question, I don't necessarily use fibs every day. We, had an enormous move yesterday, and now that our PCE data is dropping, we're pushing for more. We're arriving at 4,100. Are we going to have pullbacks? Yes. Do I feel like we're going to have a retracement? Not necessarily. So at this point, I'm not too worried about fibs. I'm going to be worried more about key levels. And I have my key levels ready to go here. So as we approach this big move is going to make it hard to see, but as we approach this trend line from the highs of year, we've got some key levels at 4101, 4108. We can start to get through those and the trend lines from high of year. 4136.5 is a huge key level. That used to be low of year back in January, February, before we went and set new lows. But 4136.5 big key level, 4156, 83, on our way to 4200, all key levels that we'll want to watch to the upside. Before I dig too far into where are we going, let me pull up our economic calendar. I was hoping to have the review done before the data dropped, but so today we had initial jobless claims, we had PCE, very important. Very huge data point that's obviously causing us to pop. We also have some income data. We have a Fed speaker right as the bell. Some more PMI data. A little bit of manufacturing construction data. Tomorrow, the big one, non-farm payroll. Can non-farm payroll cause us to reverse and start dropping? It has happened. But we have to look at where we're at. We are at a huge point of resistance. with that trend line from high of year and the daily 200 that we have gotten through, but we need to hold above and turn it into support since we rejected it every time we get near it this year. So, can NFP cause a reversal? It has happened, but this is a very strong push up yesterday. A lot of buyers stepped in, a lot of shorts were trapped and had to get out and get squeezed, right? And as we can see, they're not shy about taking it higher. Coming into this morning, let's get back to a higher time frame. So overall, we are running into some resistance. The trend lines from high of year pretty much intersect right at our key levels here. I would not be shocked for a little bit of profit taking and pullback to come back and retest these levels that we just obliterated yesterday. Once we got through the daily 200, if you look at these candles, pretty much no wicks. Teeny wick and then just full-bodied candle up for 30 minutes. Not even a half wick down and then right back up to close. Point being that we could start to run into resistance here, come back to test some of these levels from above. Obviously, want to see us hold above the daily 200 and this 4056. The overall main huge target we need to stay above at this point is 4020 and this daily 8. Last week's highs got up to about 4040, but 4020 had been resistance. And I could load it back further, but 4020 had been resistance for a while. And last week, on a low volume holiday week, we only broke above it a little bit, then we gave it out. Resistance, resistance. Overall, if we do have some kind of strong pullback today or on NFP tomorrow, 4020 is my line in the sand. We started to get above the daily 200. We're at trend line from high of year. I really want to see us hold daily 200, but could we slip it just to get bears all excited and loading heavily? Yes. And my line in the sand is that 4020, that daily 8. So everybody mark that. That is what we want to watch on any kind of strong pullback or downtrend over the next week, what have you. As long as we're above that, everything's looking great to the upside. And, yes, we are been in a bear market, and we are approaching the trend lines from highs of this year. Can we reject, go right back down, and set new lows? Anything is possible. But I am going to recognize a nice, strong uptrend and a massive reaction. It seems that big money is buying into the fact that inflation might be on the wane, the possibility that we might see reduced rate increases, and that as we go into 2023, we might be getting inflation under control, we might be seeing those rates come down, or, the increases start to come down, we might even see a leveling out. So overall, today, that trend line is going to be huge at these key levels. Would not be surprised for us to come back and retest pre-market lows at 4071. But we definitely want to watch that 4087, 4071, 4056, daily 200. And if we can get going to the upside, that 4136 and a half, 4156, and we've got some key levels even past that 4183, which is where is that third Keltner up there? Come on. 1, 2. Yes, third Keltner is up near that 4183, which is a little concerning, just because third Keltner is usually getting a little overbought. But we almost made it back to the mean yesterday and shot through first Keltner, arriving at second Keltner. So we've got our levels to the upside, levels to the downside. We had our economic data today. We have NFP tomorrow. I'd say PCE is maybe more important than NFP. And the reaction to PCE has, overall right now looking good. On any pullbacks as well, we can see that the 15-minute MA, 45 MA sits near that 40.56. So if we see any strong pullback, definitely looking for that to hold, would be going long off of that. I think that's it for ES. We can start moving through the other indices and then on to individual names. NQ from that 11,500 that it held yesterday straight up to 12,000, 12,100, starting to break a little higher. NQ still has a 2-day squeeze intact, so we do still have some resistance above, as we might try to push up to this 12,250 key level at the next Keltner and in this 2-day squeeze top. So that's the upside target for today. And any further past that, NQ has its daily 200 still sitting above, near that 12,500 psych level, 12,550. So NQ still has not tested that daily 200 in some time. NQ's been getting beat up. Let's see if they want to start letting NQ lead like it usually does to the upside, and see if we get some strong rotation into tech after this move. Should we start to reject this 12,100 during the cash session and have a little profit taking, basically want to see that 11,900 hold. It's where we got up to, had our little pullback yesterday and kept trucking. We have a daily Keltner there at 950, so ultimately looking for those to hold. We also have, last week's high is kind of near there. Ultimately looking for that to hold. I would allow a little dip to these MAs to keep going, but we need tech to hold up and start to try to lead, since it was below the daily 21 and a little weaker. And third Keltner is right near that daily 200. If we can keep going up to that 12,500 level. If we start to give out that 11,900, then obvious targets are these daily moving averages back below, but then we're talking about engulfing some of that drive yesterday, right? I can stomach a little bit of a pullback. 11,900 going to be very key today if we get down there. Ready. Ready, pulling up to 1900. So just like on ES, 4136 used to be previous low of year, and it's a huge inflection point for ES. 1900 is the same for Ready. In fact, like every rally since the summer rally, Ready has gotten up to about 1900 and then rejected it and headed back down. So we are tapping 1900, our recent high. If we have a little pullback, definitely looking for us to stay above 1880, kind of last week's highs, and where we, the high that we wicked, yesterday, pulled back to that daily 200, and then trucked higher. So definitely want to see 1880 hold if we have a pullback. Also, we have our pre-market low where we could hold above that. And if we can keep going through 1900, looking to get up to 1920 at the top of this daily squeeze, 1941 at the top of the 2-day squeeze. YM. So I am, kind of been the strongest and leading for a while now. Did not need to get back to the daily 21, held the daily 8 and daily 15 pretty much. Yesterday it did set some new lows past the previous days, but even though that was happening, we were calling out and watching that ES was doing a great job of holding, that NQ was not trying to dive down to lows. It was trying to hold up and then really helped lead to the upside once the market started to get going. So, just saying all that to point out, since YM has been leading, not surprised to see that it set a lower low yesterday. Obviously made a great move up through that 34,000 all the way up to 34,500, 600, now pushing 700. Point being, we don't necessarily need all indices to keep going higher. If YM were to take a little bit of a sideways break, that would be fine as long as NQ is going to step up and help lead. Overall, I want to see YM stay above 33,400, kind of last week's highs. So that 34,400 and pre-market low of 500 is our current support that we need to hold above. If we start to lose that, then, we're talking about coming back to test some of these other highs from last week and that daily 8 that now has been pulled up to about 34,200. But as long as we can hold up at what should now be support, we need to see that 400 to 500 hold. Looking to keep going to 34,800, 35,000 big key psych level, and our third Keltner to the upside is at that 35,100-ish. And just out of curiosity, I want to see YM's trend lines from highs. Aye. Yeah, so YM, looks like already a couple of weeks ago broke through its trend lines from highs and trucking up near recent highs. So definitely have some levels I should have had marked on this chart. So yeah, if we can get past 35,000, that March high, April high at 35,413, and it looks like 750 is about the February high. Yeah, I need to clean this up a little bit. Let's go back to our regular time frames, and we can move on to Apple. So Apple did a great job holding that 140, 141, and now made it through that 145 zone, straight up back up to the daily moving averages, and back to the levels that we were trying to hold as support the last couple of weeks. This week, she had a little sell-off and then right back up. So overall, on Apple, starting to tap 149 pre-market. For the upside, if we can continue through 149, looking to get through 150, and these recent highs around 152, 153, all to get back to that daily 200, which we are still below, which is now in the middle of our zone, around 154. If we are rejecting 149, 150, and start to have a pullback, definitely want to see Apple hold up at these daily moving averages, hold up above 146, and, if possible, our pre-market lows in that 147.5. So I want to see Apple hold up. I mean, if she starts slipping and coming back to like 146, 145, we'll likely be seeing the market go back to test pre-market lows and maybe some of those pullbacks late in the day that I pointed out. So yeah, I think that's upside downside targets on Apple. AMD. Held that daily 15 yesterday, got up through that 75, 77, now arriving at our, 79. If we can keep going to the upside, I've got too many levels here. I probably should thin them down. But, it's basically every dollar point, 79, 80, 81. Targets to the upside. If we do have a pullback, we'd love to see that pre-market low and 77 hold up. If we start to lose that, we could be coming back to test that 75 and a quarter. Amazon. Got to and through that 96 yesterday, right near that high from Monday. And pre-market already pulled back down to 96 and ramping back up. So overall, looking for 96 to hold. And to start to send us through 97, all in the where the daily 21 sits at 97, right? So we've got our reversion to the mean. Let's see if we can turn the mean into support. 96, 97. Want to see us get above that, turn it into support, and start this journey up to 100. And let's see, where's the daily 50? Sits way up at 106. So yeah, if we can, start to break out over 97 and over the daily 21, key targets to the upside, 100, 101.75, 104.25, all in the path to get back to the daily 50. And, if we lose that pre-market low at 96, we'll likely come back to 95 for a test where these daily 15, daily 8 sit. BA. So BA had that hard pullback to daily moving averages where it reversed right back up near highs. But BA has been leading to the upside for a while. Can we keep trucking higher? Yep. Got to get through 180. Next key target is 184 where that third Keltner sits. But if we start to lose 178, we could be pulling back down to these moving averages. And, a lot of names that we've covered and will cover, they kind of went sideways or did a slow drift and then they took off to new highs. BA just caught back up to its highs. So we might not necessarily be wanting to look for BA to lead to the upside and make a crazy move. As they weren't rotating as strongly into it, they just kind of played a catch-up back to highs. But she can keep trucking. So we've got our upside targets and downside if we start to pull back. Cat. Kind of the same thing on Cat. Has been leading for a couple of weeks now to the upside. Made it to its third Keltner. Almost made it again. Pulled back to these moving averages, and like we saw in BA, pretty strong rejection yesterday, and then just made it back to highs. So trying to push a little more pre-market, but we do have some squeezes in place still on Cat. If we can keep going to the upside, 238, 240 are the targets on the journey to get to 244. But if we start to reject these squeeze tops, likely coming back to these moving averages for a test. And if we start to lose 234, we could come back down to test pre-market lows and yesterday's lows near 230. Google. See, like, this is accumulation versus CAT and BA where they just rebounded. So, Google, amazing move up through 98 to our 101 through that 100 psych level. Overall, we'd love to see Google stay above 100. We can see our pre-market lows. We're doing a good job of staying above 100. Next stop, getting up to 103 and 105, more like 106. At the top of this 2-day squeeze, that's also where the third Keltner sits. If we start to lose that 100, definitely looking for this 98.78 to hold up. It was resistance. Need that to become support if we have any significant pullback. Losing that, we're talking about right back to the means. GS. I feel like banks got beat up either yesterday or maybe it was just this week. No, yeah, yesterday. They had a pretty hard drop, but recovered right back. Trying to push for more pre-market. So, obvious goal is to get up to 390. Did not get through last week's highs, so lagging a little bit. And past 390, it's 394, 400. But that is past third Keltner. So it might be that some of these leaders, like, banks, GS, BA, and CAT, they've all been leading for a few weeks while tech was remaining weak. So it might be time for them to go sideways, let the mean catch up to them while they rotate into tech. Moving on. Oh my, Meta got up to 118, huh? So, Meta got through that 114, ramped right up to 118. I'd have to go back a couple of weeks, but 118 is about where we topped out after Meta started to rebound up. After getting, its butt kick, it rallied up to 118, pulled back to these daily moving averages, held this 109, and then yesterday got back through that 114 straight to 118. Overall goal, looking to get up to 120, 120 and a half to that daily 50. If it can keep going past that, 123 is the next big key level. And on a pullback today, want to see it hold above 115, 116. If we give up any of that, then we are starting to engulf back to that 114 and where we were. Microsoft. And I need to speed this up because we're running out of time. Microsoft did a great job holding that 241, the daily mean, yesterday. Took off through 250 up to 255, our next big key level. From that's why I try to cover these key levels every day. We held this one, and if you went long off of this, and we're holding Microsoft, your next big key target was that 255, which is where we arrived to. Let's see if we can hold pre-market low, start to push through that 255, next big key target. 258, 260 up in the top of this 2-day squeeze, and that third Keltner around 262. So if we start to lose that pre-market low at 253, definitely want to see 250 hold up. We've made a few attempts to get to 250 recently on Microsoft, and we keep stopping short at 248. So at the very worst, now that we're above 250, want to see us hold 250 and keep trucking. Netflix had a big move yesterday, just like a number of these things. From 280 right up to our key levels there at 307. Making it through that 300. If we can keep trucking to the upside on Netflix, looking to get to 310. 311, kind of where we topped out before. And past that, 320, 323, this third Keltner. Ultimately, 333 fills the gap from a couple of earnings ago when it gapped down hard. So 333 is a big goal to get to fill the gap. 340, the next big key target past that. If we start to reject this 307, want to see us hold above 300. We start to lose 300, we're talking about coming back to test these recent highs. And, 295, 290, then we're engulfing, right? So overall, I want to see us hold above 300 on a dip to just keep going. Below 300, we're starting to engulf more of yesterday than I would like. Yada yada. The video. Man, NVIDIA from 155 up to 170. Let's see if it can hold its pre-market low. If it gives that out, I want to see it hold 165-ish near these recent highs. And if we can continue to the upside, big key targets, 176 and 178-ish, where that daily 200 sit. That is the target to get back to on the upside. The third Keltner is near 176. Can we push past third Keltners and just keep moving? Yes, absolutely. They're just a measurement to say that we are 3 standard moves away from the mean. That is usually getting into overbought territory, but there has been plenty of times in the last few years where we have pushed through third Keltner and just keep going, dragging it with us. So let's see if we can keep trucking up to this daily 200, and if we pull back, want to see us stay above 165, 166. That's your support right now. QQQ from 280 up to 294 yesterday. On any pullbacks, want to see pre-market low hold up at 292. The lowest I'd let it get is 290. Recent highs, just like everything else, that is your support right now. If we can hold and continue to push higher, obvious target is this 295 that we are starting to run into pre-market. Psych level 295. Past that, looking to get up to the top of this 2-day squeeze, which starts at about 297, all in the goal to get back to 300. And then past that, the daily 200 sits pretty close to 305. And then our zone above at 309, 310, 311. Obviously, we have third Keltner at 302. So something to be wary of, and we have this 2-day squeeze top as well. So even if we don't get through today and just keep pushing, as long as we hold up above 290 and go sideways in this range, this squeeze top will start to open. Our Keltners and moving averages will start to move up with us. Just talking about if we consolidate for a number of days up in this range before pressing higher. SPX. So we filled that gap from last week. Well, I'll leave the gap actually for now. Get rid of this old gap. So, SPX, we are gapping up a little bit here. 17 points, that'll put this very close to 4,100. To the upside, if we keep trucking, we have our third Keltner at about 4140, 4137, which is very, just like on ES, we have that 4136. So 4136, 4150 are upside targets. We're arriving near 4100 pre-market. If we have a little pullback, definitely want to see us hold this daily 200 at 4050. At the worst, I'd be okay with it coming back to test these highs and this gap. But we have to hold up there and keep trucking. If we were start to lose these highs and this gap, then we're just going to fall right back into that range that we were in. But as long as we can hold up and keep trucking, looking at for that 41, 4136, 4150. SPY. From 393 yesterday to 408. Shoo! So already reaching up and tapping 410 pretty much here pre-market. Would not be surprised for some rejection and pullback, maybe to retest pre-market lows. Basically looking for 405, 406. And at the worst, maybe this daily 200 and these recent highs to hold us up, right? So the lowest I would I'm comfortable with going long again is, about 403 and a half, 404 at that daily 200. If we start to lose that, then we're probably going to come back to retest 400. But if we can hold up there, I'm not saying that we necessarily get there today, but that is where our current support sits. We might be able to just hold pre-market lows and keep trucking. If we start to take out pre-market lows, we're going to retest that 200. And if we can keep trucking, 410 and then 414, the next big key level right near that third Keltner to the upside. Past 414, I've got a mess of levels here, but basically 418, 420. Tesla, you minks, gapping up closer to 200. And, been talking about this one since last week. Last week it got back above 180, and I've been saying as long as we can hold 180, we can start that journey up to 200. Set into a flag, held 180 all week. And what do we get? This move up through 190, up to 195, and now trying to push to 200. On a pullback, want to see us hold 190, 192. Well, actually more like 193. Our pre-market low, that daily 21, would love to see us hold there. At the worst, 190 to keep trucking up to 200. If we can get through 200, looking for 203, 206, 210 as your next big targets. Past that, 216, we're getting near the third. Oh, no, that's just second Keltner. Yeah. Up near 216, 220, we have the daily 50. UVXY. Made it down to below 7.5 yesterday. For upside in the market today, I want to see UVXY stay below these recent lows at about 7.6 and maybe continue this journey down to 7.3, 7.2, and 7 even. For downside in the market today, if we were to get above that 7.66, UVXY might try to make a journey up to 7.8 and 8. UVXY could make a move to do some engulfing and the market not necessarily drop crazy hard and engulf. So, just going to keep a tight eye on it. Even if it does get above that low, I'm not going to start to panic. It's the point I'm trying to make. So let's see if we can continue this journey down and keep setting new lows to get back to 7. We are getting near that third Keltner. Something to keep an eye on. But overall, playing along and confirming the move. VIX. Getting down near 20 on VIX. So we did have that big move yesterday to fill this gap on VIX, but we did not take out recent lows. So for continued upside in the market today, I want to see VIX stay below 21, continue this journey to take out recent lows at 20.3, get down to 20 for a test, and maybe even push past 20. Our third Keltner sits down at about 18.5. Which is another big key level on VIX, 20, 18.5. So if we're going to see continuation to the upside and break out of our trend line from highs, we're going to likely see VIX get down to that 20, maybe down to that 18.5. Not saying it happens today, could happen throughout the rest of the week or into next week. But if we're going to pull back and reject that trend line from highs, we'll see VIX stay above 20, work its way back to 21, and then start heading higher to 21.5, 22. So that's it for today. Hopefully this is helpful for everybody. Good luck today, and we'll see everybody in the chat. It is a free Thursday, so if you're new to predicted trades, you can come in on Thursdays and test out our tech on your options charts so that you can trade right along with us. But good luck today, everybody, and we'll see you in the chat.